Okay, welcome guys to today's video. Today we're going to be looking at smart money concepts, market maker squeeze and manipulation. Learn how the market makers induce and wipe out others. So in today's video, we're going to go in great details how to see how market maker actually manipulates the market, they squeeze it and induce buyers and sellers. Then at the end of the day, they wipe the others out. You want to say and move the price in the direction they actually want price to move. Either what they have wanted to do earlier on, but had to mislead traders. So we are going to learn how that usually occur. I'm going to be giving you one of the ways to see that. So probably this is going to be one of those series I'm going to be coming up with frequently about the market maker squeeze and manipulations in the market, so that you can be able to um, identify them and see them in price to help you in your trading regularly. So as you all know, I usually give a friendly call as every time I do some videos, maybe not on all my videos, but on some of them I give friendly calls. And what is the friendly call all about? For those of you that are watching my video for the first time, it's probably just reminding you that especially for aspiring traders, new traders, and also those on their journey to consistency, and even those that are profitable, you must understand that time is the key factor. We remind you, we talk about three factors. If you watch my previous videos, we talk about time, patience, and discipline. So these are three factors that will help you as a trader, not just to make profits in the market, but to keep you consistent on the long run. I want to say you must understand timings, you must understand the act of being patient, you must understand the art of being disciplined. When we talk about time, we're actually talking about the main ingredients for your trading. You want to say the thing that actually encompasses all your trading. And like I've said earlier on, in every sphere of life, time is a real factor, because your understanding of time will even help you be more patient and disciplined. You know what I'm trying to say? Because time is a revealer, as I always say. You know what I'm trying to say? Time is a revealer. It reveals opportunities, it reveals seasons, it reveals setups in the financial market. In this case, we're talking about forex and trading in general. So time actually reveals what the market is going to present, the opportunities the market is going to present for us. So your ability to understand timings in the market, you know, to say, keeps you at bay, keeps you at peace. You want to say, makes you more patient. You understand? And on the other hand, also informs your discipline, informs the way you approach the market. Hallelujah. So I just said hallelujah. That's good. So that is very, very important. You know what I'm say? It's very, very important. So you must understand that it's very, very important that you pay attention to your timings, your patience, and your discipline. So if you're able to understand these key factors, it helps you develop yourself even as a trader. You understand? You don't want to be pressurizing yourself unnecessarily. Everything takes time to grow. You understand? Everything takes time to grow. So this is just a friendly call to encourage you that as long as you are training yourself the right way, you're on the right track. You understand? So you must know that you shouldn't give up. You shouldn't question yourself. You understand? Time will reveal all you have been doing. Just keep at it, keep studying, and the rest. So with that out of the way, let's continue. So today we're looking at the market maker squeeze and manipulation. So if you look at the screen right now, we can see this piece of price action that's occurred in the market. So if we are to be in a room and I ask each and every one of us, okay, what direction do you think this market is going to go next? Probably some of you may get it, only few of you get it wrong, but most of you will say probably downtrend, and which is what everybody's going to see, especially when you are conversant with the concepts that we teach based on smart money. You know that, okay, yeah, right here is what's an imbalance. So price needs to come down to fill here. And when you look here already, you can see that price has broken this short-term low right here. And what price should see what lower prices. So this is a sell for every one person, especially those that understand smart money concepts. And if you also look from the trend of this price action, you can see that here we had what? We had a high, and here we had a low. But if you look here, we have a higher low. You understand? So price has been creating what, for those of you that understand market structure, and say lower low, lower high, lower low. You understand? And now we have a lower high. And to confirm it, we see this little shift in structure, break of structure right here, telling us that price is going to come down, probably to fill in this void, or probably take out the stops, the liquidity that is resting below the marketplace right here, or maybe stop at this order block, as we can see here. You understand? So probably everybody's going to say it's a sell trend. So let's just say we all agree it's a sell trend. You understand? To say, and the next thing we did is we placed our order at that green line. We all placed our order there in that green line, and we are saying, okay, I don't know if this market is going to retrace upward. I just want to enter my order right here because I've seen a break of structure. You know what I'm saying? So, and if I look clearly, there's an order block right here. So price just retraced a little. So price may continue straight into this without waiting. So we entered our order right there in the green line, and we placed our stop loss where, above here, above the marketplace, because we don't want to see price violate this particular high, because even the market structure, the general market structure, the institutional order flow has been supporting what, bearish moves. You understand? So we are expecting more moves lower. You understand? We don't want to see any higher moves. We don't want to see price come to break this high or come for this high. You understand? So we started watching price did this. At this moment, some of us already have doubts in the market, but some of us that are adamant will be like, don't worry, it's going to pan out. It's a sell trend. You know, so we're going to hold it on. It's going to sell. It's going to do this. But at this point, some people will already start panicking. Why? Because we probably saw it enter profit and went back to loss. It started dwindling, and at current price now, we are already at a loss in this particular market. If this is the way we have entered the trade, you understand? Probably we didn't enter at this. We weren't patient enough to enter at this high over here. We weren't patient enough to enter at this high here. We entered here. You understand? Which is quite reasonable also, saying that we already have a break of structure. You understand? So now we see price start dwindling up and down. You understand? And now currently we see this big green candle right here. You understand? On this price action here, this piece of, and it's already on a losing streak already. We're already seeing a loss on our trade already. So probably some of us could collapse our trade and be like, this is a choppy market, a consolidation market. But some of us will hold it. So let's just see, for those of us that will hold it, what would have happened. Bam! And price did what? Price bust our stop loss. It took out our stop loss out of what? The marketplace. And we saw price dwindle, and sold down, coming to where it's aimed at before, where the lows, the stops below this low. You want to say right here, we saw price come for that stop straight up, and we saw it also filling the void right here. We saw it filling the void right there and came in and clear out this stuff. What you just see happen right now is a market maker squeeze and manipulation. You want to say they squeezed the market right here. We're expecting straight up sell, and say into this void, which shouldn't be, because here's not a, like, this is not a resistance. There's no resistance here, because no enough resistance here except for this order block we have right here. You know what I'm saying? But what we're saying here, there's no much resistance at this area of value right here. So we expect price to just see a straight up sell into this region right here, but the market makers decided to squeeze price. Why? Because to take out the people that had their stops right here, that entered the order at this market. And you see, they didn't come back for this particular high. They only came back for this high, took out the high, sold down, take the orders right here, did what again, came back for the high over here again, and sold down to the main objective where they would have taken price for. What you just see is a price action for a week. So let's just get into the MT4 platform and see, and so you understand. I'll give you in great details why this happened the way it happened. So if you are looking at price now, this is the MT4 platform. I'm using the SNS server to show the price recordings here. So this is the same price action you saw in the presentation on the other slide. So you can see the same price action right here. We have our high here, Let me say price went here, came up at this region, came back for this low at this region. This is the big candle we saw, and we're already at the loss. Price came back for where the high here, and all of a sudden came back for where again the high here before coming down to the objective we aimed at before. You understand? So now I'm going to put my markers on the chart so that you understand what really happened in the price action. So you can see right here, so this was where we saw price and we started expecting rather bearish moves at this region right here. We started expecting bearish move at this region, and all of a sudden we saw a spike higher. So probably we say it's not, as far as it didn't break this high, we're sure that it was going to come down. You're trying to say good, but all of a sudden at this region we noticed that this is not, at this region we noticed that this is not favoring us, because all this consolidation right here, this is the squeeze, this is market maker squeeze, because as I said earlier, there is no resistance right here. There's no law of resistance right here, so there's no need for the market makers to be squeezing price here. All they should do is take, even though they wanted to take price higher, what they would have done was take price lower, fill in this void, tank the order block, and did what? Went higher. That would have been a classic smart money concept in our head. That would have been a normal idea. You understand? So, but probably some of us didn't know that this was what they were doing. You understand? Some of us held on to the trade, and that's why I'm here to explain why that happened. So this is on the EURAUD, as you can see on this platform already. So what you need to pay attention is, you come back to the left side of this chart, you see the areas I marked up. So this area we have here is FVG, is known as the fair value gap. For those of you that don't know about the fair value gap, I have the video. I'll be leaving the link in the description. And upward we have the order block, this little order block right here. And if you look also further, you can see also this big order block right here also, that price also had here. So now at this region we expected was sell, so we entered our sell position here, placing our stop loss here. But there were orders that this market smart money had that were not induced into the market yet. There were orders, so they wanted to take this order, and these orders were what? At fair value gap and at the order block right here. So what did they do? They had to squeeze price. They had to do what? To squeeze price. Came out, take out your stop, and did what? Tank for what? The fair value gap. First manipulation. And what do you see next after that fair value gap? We saw what? A sell, a straight sell. You see how big the candles are? That's a sign of smart money. The market makers, that's their sign into the market. Where did they come for? They came for the stops below here. Mind you, two goals for these market makers. Number one is to induce orders into the market, and number two is to wipe out orders from the market. So they engineer liquidity and they take out liquidity. That is their job. That's what they want to do. So you must understand that this is the goal of market makers, to induce liquidity and take out liquidity from the market, engineer liquidity and wipe out liquidity from the market, induce buyers or sellers into the market, and do what? Wipe them out. So at this region now, we saw them. What do we see them do here? I'm say we saw them induce sellers into the market. We can see them induce sellers. I'm say people that were willing to sell. They started selling at this region right here. You know what I'm saying? They sold at this region right here. So when we saw this candle, we were like sure that, wow, it's going to sell. You know what I'm saying? And even giving us more confirmation of break of structure right here. You know what I'm saying? So we saw it go higher. We saw it sell. So definitely at this region, some of us using the engulfing pattern would have used here as our entry and placing our stops right here. So depending on the time you saw the move actually happen, so you'd have entered here and say, okay, this was going to go as a sell, especially when you understand smart money concept that price is going to come down for this region. But all of a sudden we saw this boom up and price came for what? The fair value gap. You understand? And immediately we saw what? A response in price from the fair value gap, showing that this was actually a squeeze, a market maker squeeze for manipulation. What did they squeeze here? You understand? They squeeze in sellers. You understand? Squeeze in sellers, accumulate buy orders, induce buyers on the short term. You understand? And what did they do again? They came out and wipe out what? The buyers. They wipe out the buyers where? Below the marketplace right here. You understand? So when buyers saw that the market has changed, they started buying. What did they do? They wipe out the buyers right here. Are you seeing the manipulation right there? But you must first pay attention to what? To this squeeze, especially when you enter that this region where you're watching price from this place. And the next thing you want to pay attention to is, are we having a high resistance liquidity run? Is there anything like a high resistance? If price was chubby around this region here, that would have justified this squeeze, but price was smooth. Look at price only delivered on one side. You know what I'm saying? So this squeeze was not expected. You know what I'm saying? But later on we saw the squeeze happen. So these are ideas you must have in your head, you know what I'm saying, to anticipate manipulation. So the next thing they did was took out their orders at fair value gap. You want to say their buy orders at fair value gap and sold the market to take out what the buyers. You want to say take out the buyers. Mind you, they've taken out what sellers right here already. Now they took out what buyers. The next thing was to do what? To manipulate price to the upside, induce buyers now, because mind you, the main objective is to sell, not to buy. That was their main objective, at least for the week. If I put the marker, the period denominator, you can see that the main objective for the week, even to the next week right here, was to sell, not to buy. So what did they do? When price came in on Thursday, they manipulated price. They engaged in another squeeze again. You can see the squeeze right there. You understand? They did another squeeze after inducing the fair value gap sell orders, taking out buyers from the marketplace. What did they do? They retraced. You understand? Providing us with more sell opportunities. So now induce sellers into the market, trap sellers. Where are they coming for? For the order block right here. You understand? And also for the stops that it created, the orders, the buy stops that they created at this high when they took out the fair value gap. So they came back for that region right there. You know what I'm saying? Mind you, all this is a price action for in 1 week. This happened last week. At the time of recording, this is Saturday, 28th of May. You know what I'm saying? And what they did, or they came for what? The order block right there. That was where their pending order was actually. And what do you see? Since then, we saw what? Bearish moves to the main objective, where? Below this low, to the main stops below this low. So this is market maker squeeze and manipulation. So how do you anticipate this? First of all, you want to have in your head that market makers have two goals. Their goals is number one, to engineer liquidity, and number two, take out liquidity from the market. They are doing this for their own purpose. You know what I'm saying? The number two thing you want to bear in mind is, are we at the point of buying or selling? Are we seeing a high resistance? Are we going to experience are we buying or selling into a high resistance liquidity run or a low resistance liquidity run? One, what do I mean by that? Are we seeing chubby price actions like this over here? I don't know to say. Or are we seeing price just deliver on one side? And in this case here, we are seeing price deliver on one side. So in this area, we are not expecting anything like a manipulation to happen. We're just expecting price to deliver. You know what I'm saying? But at the moment where you start trading and you start seeing price squeeze, especially price did not deliver in the next day. You know what I'm saying? Because once there's a low resistance liquidity run and you enter on this particular day, this being on a Tuesday, you should expect price to deliver latest on the Wednesday into what? The low resistance liquidity run. That's the the liquidity void right here, or even the fair value gap below here. You understand? So you don't want to see price the next day dwindle for too long, especially to come and see a big candle like this. You know what I'm saying? What's breaking the structure? Because if you look here, you see price broke structure. So you don't want to see price break structure to the upside. You know what I'm saying? You don't want to see price do something like this, break structure to the upside, or create a squeeze, also known as a consolidation like this, on the next day. What you want to see is price deliver straight into what? To this low resistance liquidity run, which is known here as the liquidity void or imbalance, as some of you may know it. I'll leave the video also of the imbalance, I'll leave it in the description. So you want to see price deliver straight into this what? Low resistance liquidity run. You understand? You don't want to see price dwindle like this. You understand? But when you start seeing price dwindle like this, the next thing you want to do is look for opportunities to mitigate your position or get out of the marketplace with the little loss that you can see. You know what I'm saying? Depending on your order. Like for instance, I was on this particular trade. You know what I'm saying? That was why I knew what was happening. I took out my position with a little profit. I just mitigated it. My orders were just right here. You know what I'm saying? And I just mitigated my position just below the marketplace, just below my open price, the price I entered rather. You understand? And immediately after I did that, I saw the manipulation happen instantly. You know what I'm saying? So I also believe that some of us would have been trapped in this market, and that's the reason why I'm also making this video, so that we'll be able to understand and know anticipate these moves in future. You understand? So the things you want to look out for, you want to see, are we in a low resistance liquidity run? Like in this case we are. So we don't want to see a squeeze. We want to see price deliver as fast as possible. But the moment we start seeing a squeeze, what do we want to do? We want to get out of that position. We want to get out, especially when we start seeing a squeeze for a whole day. Just like in this situation, we entered at this price, so we expected in the London session or in the New York session, price should deliver into here. But London session pass, New York session pass, and price is still dwindling, still in its own squeeze. The market maker still kept price in the squeeze. What you want to do, you want to get out of that position, because whether you like it or not, they are going to manipulate price. So this third thing you want to look out for is above your high or your price or this institutional order flow. Is there any other reference point that price will likely retrace to, especially when you are seeing this squeeze? In this case, we have the fair value gap on the upside and the order block right here, and this bigger order block here. So immediately I started seeing this squeeze, I asked myself the question, what place are they trying to take this market to? And immediately my eye went to this fair value gap, and that was one of the conviction that made me got out of this trade. Why? Because I saw this fair value gap just above this high for my entry. So I saw that price was going to come back for this fair value gap and this order block. So I mitigated my position here, because I know that if we're experiencing a squeeze for a whole day, you know what I'm saying, and price did not deliver especially when we have a low resistance liquidity run, the next thing was that they're going to manipulate price where? To fair value gap or to the order block. And in this case, that's what they did. They manipulated price to where? Fair value gap, came back, took out the orders, manipulated price again. I know some of us would have probably been extending our stop loss when we see something like this. No, you don't want to be trading like that, because number one, it will affect your psychology. Number two, that's bad risk management. Number three is that you are not building yourself up as a trader. You still have FOMO, fear of missing out, or FLOT, fear of losing trades. You understand? You need to kill those urge, and that's why you need to risk small in the marketplace and frame your trades properly. So and that's why I'm showing you this manipulation, market maker squeeze, you know what I'm saying, and manipulation. So the first thing you want to look at for, I repeat again, is you want to see are we having a low resistance liquidity run? Yeah, if yes, we're having, like in this case we have. The second thing you want to see for is, we don't want to see price delay, we want to see price deliver straight into that low resistance liquidity run. But in this case, when we start experiencing a squeeze, especially for a whole day, the next thing is that we want to mitigate our position. That's a sign that market makers are squeezing price. They are inducing buyers and sellers into the market. The third thing we want to look out for is, now that we have seen a squeeze above the high that is supporting our sell trend or buy trend, in this case sell trend, is there a fair value gap? Is there an order block? Or is there an high that, or equal highs that price will want to run before coming back to this objective right here? And in this case we have the fair value gap and the order block, and that's what price actually did, what came back for. Price came back first for the fair value gap, taking it out, and lastly for the order block. So these are the things you need to bear in mind for why trading the marketplace, about the market maker squeeze and manipulation. So I hope you find value in today's video. If you do, do give us a like, and also hit the subscribe button. And also I also like to see your questions, because they help us a lot. Or maybe there's something you don't not understand in this particular price action analysis, and you really want me to explain. Probably if you look over here, price didn't just come back for the order block right here, it also came forward for this high also. So you would have give you a double confirmation to start selling. You understand? Start selling the marketplace down to this place. And even to show you that this sell would have worked, is that below here you can see liquidity is resting below here in forms of sell stops. You know what I'm saying? In form of sell stops. So price came down, clear the sell stops. Look at low resistance liquidity run in form of imbalance. Price traded back into where? The imbalance first right here. The next one was into the order block. The order block right here. And since then price traded even into the next week, doing what? Clearing out the sell stops below these lows right here. So that is the extra lipstick on the chart that I added. That was the extra analysis. So these are the things you want to just pay attention for. So you can go back in your chart and watch how this thing happened using the reference points like you can see here, and to better build your mental muscle to anticipate this market maker squeeze and manipulations in the market. So thank you very much for watching today's video. See you in the next video.